I used to trade an intraday system called the Close Oscillator. Really, this comes from an observation of the markets, and I used to trade stocks with it. Then I ported into futures, and I just tested it recently, and it still works on stocks, futures, and forex, crypto. Basically, it works on all assets intraday, so it's the perfect system for you guys looking for fast action trading system. So in this video, I will show you how it works and how you can use it to build your own system. So let's start. Welcome back, everyone. Thank you for joining me. My name is Ali Casey, and you're watching Stat Oasis channel, where we discuss finance, investing, algorithmic trading, portfolios, making money, everything else in between. If you are new to this channel, make sure to subscribe, hit the notification bell, so you don't miss any of the daily videos that I post on this channel. And if you are getting any value out of these videos, please do smash the like button and share the video. Actually, sharing the video is the best thing you can do to help Google to push the video to other traders and help me in return to grow the channel and push the message of investing out to the world. So let's deconstruct the OC oscillator. Like I mentioned, the OC oscillator is the open-close oscillator. Basically, it comes from an observation that in an up market, like for example, this leg, this leg, this leg, and this one, you mostly see that green candles more than red candles. And of course, it's the opposite in down markets. So we can see here more red than green, more red than green, more green than red. And that is to be expected because in an up market, mostly the close is higher than the open, and therefore green candlesticks. And in a downtrend, mostly the close is lower than the open, and therefore you have red candlesticks all the way down. So if you can somehow measure this up and down candlesticks, then you can get an idea when we are in an uptrend and when we are in a downtrend. So a simple and clever way to do this is to build two moving averages. Now, of course, everybody is familiar with this across moving averages, but in this case, we are using actually two same moving averages. They are both the same period. The only difference is we're calculating one on the close and the other is on the open. So that is the trick we are using. So the green moving average here, by the way, these are both 9-period moving averages, and this is 1 hourly time frame. And the green moving average is based on the close, and the red moving average is based on the open. So when the green above the open, that means mostly the close, because this represents the average of the close. When it is higher than the open, that means mostly we are in an uptrend. When the red is above the green, that means the open moving average is higher than the close moving average, which means mostly we are in a downtrend. And that is it. It's really a simple observation of the market, and you can use this system profitably to trade any assets. Now, in order for this system to make money, like all moving averages crossover, you need a trending market. Yes, this crossover is faster to react, let's say, than normal crossover moving averages, but you still need a trending market so you don't get whipsawed up and down, and then you don't make money. And we can define the trend in many ways. In the system I will show you now, I will use again another moving average to define the trend. Although, like I mentioned, you can use anything to define the trend. You just want to trade with the trend. So the cross you take it has to be with the direction of the trend. So here I switched on. So this orange line with the painted area, this is the 100-day moving average, and the red dots are the 200-day moving average. And so basically you want to trade with the direction of these two. So when these two are up, you just take the crosses up. So you take this trade, you take this trade, and we just started a new trade. And of course, it's the opposite side. When both of them are trending down, then of course we take this trade, we take another one here, crossover, and another one here, You get the idea. So really extremely simple system. It works very nice intraday, especially on trending days. And of course, I just showed you how you can find trending days. And you can find those in all assets: crypto, futures, forex, stocks, indexes, 1 hour time frame, 4 hour time frame, 24 hour time frame, because we know trends exist in all markets and in all time frames. They are just not that many. Usually the average is 20% of each market is trending and 80% is not. So you need to find those 20% in each market and use those to trade. So this is the ES 24-hour data stream, and we're trading the 1 hour time frame and one lot, and nothing is picked in trading options. And here are the trading logic. So when the SMA of 9 periods of the close crosses above the SMA 9 period of the open, and when the SMA 100 greater than the SMA 100 1 bar ago, so we are looking for this to be rising. Now in SQX we have SMA is rising. The problem is SMA is rising for 1 bar. So here I use for X bars and I use 3 bars. So what I'm looking for is I am looking for this to be up 3 times in a row. So in 3 bars, the close of the moving average is always higher than the previous one. Basically, I want to filter out false crossovers. And finally, I will add this condition, which is the SMA one. Instead of the 200 bar, I will use the SMA greater than the SMA 10 bars ago. So again, if for example here, if we have 1 tick up, I don't want to take that. I want to take 3 ticks up in a row. Also, by the time 3 ticks up in a row happens, I want it to be a new high for this moving average from the past 10 bars. Now, like I mentioned, you can use anything you like to define the trend. RSI, ADX, Kaufman ratio, 200-day moving average, anything you like. It's just, we are just finding a way to go with the trend. Now also I added here the profit target and stop loss because I don't want to get stopped out on a crossover, because most likely with a crossover I will lose or I will give back some profits. So instead I used an ATR based value for the profit target and stop loss, so I can exploit the volatility of the market. So when the market is volatile, that means the trend will go long further, and therefore with an ATR I can capture higher profits. And I just made it the same for the stop loss, so it's 10 times the ATR of 20. Now 10 times you might think this is too much, but remember we're using the 1 hour time frame, so we need a high multiplier. And this is the result. 200 and almost $250 trades and compounding at 25 or at 24%. We can see the equity chart. This is still 2018, and let's see what happens. So since 2018 this system was performing beautifully up to, we just made a new high actually in July. So the system's performing beautifully, but of course we need to take care of the drawdown. I don't recommend, like, this system is already good, there is no need to play with the drawdown, but you need to mix it in a portfolio to lower that drawdown, because this is an intraday system and most likely with a daily system it will not be correlated. This is the same system on the Bitcoin USD, but I only have data from 2018, and this is EW futures on 1 hour, again 26 compound annual growth rate, and this is RJ, and this is 4 hours on Euro USD futures. Now of course everything I showed you can be used as building blocks to enter other systems. Like I mentioned, the trend filter can be used in any way or shape. Also the exit, the stop loss, profit target, trailing stop, all these can be changed. But the main idea is to use out of this is you can use the open and the close to see if you are trending up or trending down, and you want to go with that simple trend. And you only need to filter the big trend, so you filter out the false crossovers. Really simple observations. Like if you watch the market, you come up with these ideas. And nowadays, it's very easy to test your idea and iterate on top of it and actually put it as a building block in a data mining software like StrategyQuant X, where you can use that building block to come up with even newer ideas. So that's the power that we have now as algorithmic traders in our hands. As always, I hope I shed the light on some new idea that you can use or maybe iterate on this system to be used in your own portfolio. As always, if you have any questions, I'm happy to answer them. Please engage by commenting down below. Good, bad, ugly, whatever you like. For finance, futures, stocks, anything you like to comment down below, I'll be happy to answer. Of course, you can always join the Discord server to continue this conversation through the Patreon link down below. As always, good luck with your trading, good luck with your investing. Smash the like button, stay safe, and I'll see you soon.